Hello folks, this is Howard Reitzel from Invest Financial with our discussion our economic events that occurred last month, give some insight into what they mean to you as an investor. At the end are required disclosure statements. October was a jittery month for the financial markets, though the United States economy continues to do well. Despite growing, accelerating economic growth in the United States, let's take a look at what happened last month. Investors got their first look at third quarter economic growth and found that gross domestic product grew at a whopping 3.5% for the 3-month period ending in September, beating economists' expectations by a wide margin. Though the GDP growth decelerated from its 4.6% pace in the second quarter, it was the fourth quarter out of the last 5 that the economy has grown more than 5%, or more than 3.5%. Let's keep in mind this is only the first GDP growth estimate, and it will definitely see revisions. Higher or lower, we can't know until more reports come in. However, at least one major player felt good enough about economic growth to make some major policy changes. The Federal Reserve announced at the end of its groundbreaking quantitative easing programs, meaning that after October, the Fed will no longer purchase new bonds to support the economy. This means that the Fed feels good enough about the economy to take off the training wheels. They will, however, hang on to their $4.5 trillion in bonds for a while longer, in case the economy needs a bit more help. Digging a little deeper into the news, analysts are reading a bit of hawkish tone to the Fed's announcements, which means that there's a risk that interest rates will rise sooner rather than later. Because the Feds feel optimistic about the country's economic outlook, some analysts think that the rate hikes might come as early as spring 2015. Either way, we're confident that the Fed will look closely at the data available before making any big decisions. Consumers are also feeling great about their economic prospects. Consumer confidence surged in October to the highest level we've seen since October 2007. Overall, Americans are feeling much better about their job prospects and their ability to qualify for better jobs and raises. This is great news for consumer spending and the economy going into the holiday shopping season. Third quarter earnings seasons kicked off in October, and now that more than half of the S&P companies have reported in, we have a pretty good idea of how companies did last quarter. Overall, earnings are quite decent, but reports indicate that U.S. companies continue to do basically well. For the 287 companies that we know about, total earnings are up 6.5% for the same period last year. Even better, revenue is up 5.1% as compared to a 4-quarter average of 3.5%. This means that demand is coming back and U.S. firms can hopefully look forward to a better revenue picture in the coming months. Looking ahead, investors will be looking carefully at earnings data and growth prospects for the rest of the year. Although third quarter earnings are looking decent, analysts are now looking forward at guidance about fourth quarter earnings. Though the domestic growth picture is looking rosy, many firms are worrying about how slow global growth will affect their sales. With the recent strength of the U.S. dollar against foreign currencies, it's possible that exports will fall as they become more expensive to foreign buyers. As always, we'll keep you informed. That's it for the October Educational Economic Update. Here are some of the upcoming events that we'd like you to know about. I will be relocating my office to the Johnson Creamery building here in Bloomington, Indiana on December the 15th, 2014. We are very excited about that move here in Bloomington. Please stop by. Once again, this is Howard Reitzel from Invest Financial Corporation, signing off for the month of October. If you have any questions about what you heard in this update or would like to discuss your personal financial situation, please give me a call at 812-500-0263. I would be happy to talk with you.